Silver, long-term forecast for the week of June 4th, FXEmpire.com. The silver markets printed a hammer for the week over the last 5 sessions for the third time in a row. This massively supportive look to this market, but there are reasons to be concerned at this point in time. For example, the industrial demand in silver is just simply broken. Unlike gold, silver can be both a precious metal and an industrial one at the same time, or alternately, depending on what's going on. With the weak jobs number out of the United States for the month of May, it looks like the industrial demand will continue to decline. Add to that the fact that the Chinese are slowing down, and you have a recipe for low industrial demand for many things. However, looking at this chart, it does look obvious that we do have a support level somewhere right around the $27 mark. But on top of that, we have lower highs going back to fall of last year. This does look like it could be setting up for a pop, and a break of the highs from the 3 weeks in a row could have us aiming long for $35 as it's the next area. And it almost looks like we have settled into a little bit of a rectangle. Alternately, though, a breaking below of the tails of these hammers would be a very bearish sign and have us aiming for 20. So we do have a nice little setup here. The one caveat to this trade, of course, is going to be that one of the things that have traders possibly being interested in silver is the idea of quantitative easing. If Ben Bernanke suggests over the next few weeks that there is very little hope for quantitative easing, that could put a spike right back down into this pair and send it this market and send it much lower. Some of the support certainly has to be based upon the principle of quantitative easing being a real reality. But at this point in time, we are not interested in going long until we break these hammers, and even then, we're going to be somewhat cautious and take profits right around 35. There's also the possibility that we could be forming a triangle, so there's quite a bit going on in the chart at one point.